Hey MCE crew, I hope your day is progressing profitably. Your bank hates you, and I'm going to show you a shining example of that. From the standpoint of being a customer of a bank, they have little to no respect for you, and they treat you as such. Now, if you are the owner of a bank, then the equation changes entirely. And if you stick around for this entire video, I'm going to show you how you can set up your own personal bank using one of the techniques that banks like Wells Fargo, Bank of America, JP Morgan, one of the techniques that they actually use to set up, yes, you heard me right, your own bank. And when I say your own bank, that means you can borrow from this bank, okay? You can enjoy tax benefits from this bank, and you can enjoy all types of other benefits from setting up your own bank, okay? So we're going to get to that later in the video. But you ever ask yourself when you go into your bank, hey, why do they have a container of suckers on the counter here? Well, from the bank standpoint, you are what you eat. And a lot of times those suckers are dum-dums. The dum-dum lollipops, it's a little private inside joke, because when you bring your money into that bank, although it becomes a liability for the bank once you deposit it into an account, because they owe you that money at a moment's notice, okay? It becomes a liability for them, but through the use of fractional reserve banking and through the use of interest rate arbitrage, they become phenomenally rich. And in exchange, they give you very, very little. So let's talk about a move that Wells Fargo made recently that pulls the rug out from under many of its clients. Wells Fargo is closing all personal lines of credit. Wells Fargo has begun informing customers that it will no longer be offering personal credit lines, with all existing lines being shut down in coming weeks. In a 6-page letter to customers obtained by CNBC, Wells Fargo said it had, quote, recently reviewed its product offerings and decided to discontinue offering new personal and portfolio line of credit accounts and close all existing accounts, unquote. Now get this. Instead, setting its focus on credit cards and personal loans. So, okay, look, why are they doing this? Because this helps them win. This helps the bank owners, the shareholders, win. If you own a share of Wells Fargo, this is good for you. Not good for you if you are a line of credit holder with Wells Fargo. This is how it works. The lines of credit, you can go out there and get those at pretty decent interest rates, okay? But beyond that, when you have a line of credit, let's say you have a $100,000 line of credit and you use $10,000 of that. So you have $90,000 left that you can tap into, but on the $10,000, you're paying interest, but you're only paying interest on that $10,000, okay? However, with a credit card, credit cards are some of the most expensive money out there. Credit card interest rates are in the neighborhood of 16% on average. Now, we're talking personal lines of credit here, but I'm going to tell you that a business line of credit is somewhere in the neighborhood of 5%. And you might say, well, you know, Tyrone, you're comparing apples to oranges. Well, not really, because on this channel, we always advocate for you to exercise your entrepreneurial leanings, because there are so many benefits that come with owning a business, okay? So you see, one of those is being able to access money, in this case a line of credit, at a much lower interest rate than you would a personal loan or credit card interest rate. So 16% on average for the credit cards. On a personal loan, you get a $100,000 personal loan, okay, from Wells Fargo. So you're going to pay, once they transfer that money into your account, you're going to pay interest on $100,000. Not just, you know, in the credit line scenario, you paid interest on $10,000 because that's all you used. Well, when they put that $100,000 in your account, you can use $3, but you're going to pay interest on $100,000. So this is a much more profitable arrangement for Wells Fargo. And don't forget, Wells Fargo has access to all of these clients that are coming off of this line of credit situation that they're closing. And let me show you how. You think that people are going to say, well, to hell with Wells Fargo. I'll take my money elsewhere. I'll get a line of credit somewhere else. Well, let me continue. The revolving credit lines had been a popular consumer lending product, allowing customers to consolidate higher interest credit card debt, avoid overdraft fees on checking accounts, as well as other actions. So in that scenario, people were using these lines of credit to take their high interest rate credit card debt, put it on the lower interest rate line of credit, and that wasn't helping Wells Fargo out because you were paying less interest in that scenario. They were avoiding overdraft fees. Again, the overdraft fees are a profit center in many ways for the banks. People were able to avoid that. So Wells Fargo's like, wow, we can't catch a break here. We got to change these rules on these clients who have been paying diligently. And so therefore, that's another reason why they're moving out of this line of credit arrangement and putting you in credit cards and loans. The credit lines usually allow customers to borrow anywhere from $3,000 to $100,000, CNBC said. In a frequently asked question portion of the letter, the bank explained that the account closure, quote, may have an impact on your credit score, unquote, adding that they could not be reviewed or reversed. So remember when I said, oh, I'm just taking my business elsewhere. I'm not going to let them do this to me. Well, if you go and try to apply for a new line of credit after having this line closed, the new organization that's extending credit may look at that and say, hey, well, your credit score dropped a little bit. And you're thinking, why did that happen? Well, when you look at it, it's because a credit account closed. I know it's through no fault of your own, but they're telling you right here, it's probably going to impact your score negatively. So that's going to bring you back into the fold at Wells Fargo. They're going to say, oh, we understand what's going on. Don't worry. We'll put you in one of our loan products. We'll give you one of our credit cards at 16% interest. And you're going to say, well, why can't you guys just write a letter explaining to Bank of America that, you closed my account involuntarily. It wasn't up to me. And they're going to say, sure, buddy. Okay, listen, we can help you over here with a credit card or loan. Otherwise, get lost, basically is what they're telling you. So this is why if you're a share owner of Wells Fargo, then this whole arrangement makes a lot of sense. But if you're a client of Wells Fargo, then they might as well send you one of those dumb lollipops because they got you. So what do you do about this? How can you set up a situation where you're, again, financially independent and able to, get away from being this dependent on a banking institution? Well, one of the things you can do is you can open a properly structured permanent life insurance policy. Now, people don't typically think about the insurance companies as financial institutions, but they are. Banks don't keep their money in a bank. A lot of times banks will get what's called bank-owned life insurance. They'll put their money, your money, into a life insurance policy that's backed by one of their executives or several, in some cases, several of their workers, hundreds of their workers. And that life insurance policy will allow them to supercharge the return on that money while keeping it safe, okay? You hear about banks, you pass banks on the street you ride down a major boulevard in your town, you're going to pass 5 or 6 different banks. That's not the case for insurance companies. So they don't become top of mind in terms of being a financial alternative to the bank. But they indeed are, okay, in many, many ways. So if you open a properly structured permanent life insurance policy, and there are quite a few out there, okay, there are choices within that category. You got to talk to someone who is qualified to deal in that space, which we eminently are. You're going to find that, again, you can get much better returns. You can get 3 very key tax benefits that you're not going to find on any savings product with a bank. On your savings account and on a certificate of deposit, Once that starts earning interest, that interest is going to be taxed, okay? So you've already paid money on the money that you deposit. You've already paid taxes, rather, on the money you've deposited, and you're going to pay taxes on the return generated. However, with a properly structured permanent life insurance policy, you're going to enjoy 3 tax benefits. Number one, Section 72E of the Internal Revenue Code is going to allow you to grow that money tax-free. And then Section 7702 is going to allow you to access that money tax-free. Then finally, Section 101A is going to allow you to disperse that money to your heirs at a certain time and have them get the money tax-free, okay? So in addition to that, of course, with an insurance policy, you have other benefits like, of course, the death benefit. You have certain health benefits in there. You can borrow from yourself. And this is so key because you don't need to go to a bank. When is a bank going to loan you money? When you don't need it. But when you need some money, okay, when maybe you've lost your job or your credit has taken a hit, okay, you're going to find it very difficult for a bank to extend you a loan. So if you have got, let's say, $100,000 built up in a cash value life insurance policy, then this credit line closure that Wells Fargo is prosecuting is going to mean a whole lot less to you. It's not going to impact you nearly as significantly as it would if you did not have your own bank. So if you want to learn more about setting up your own bank, then just go to our website and you can send us a message and we will get back to you and talk to you extensively about how to do that. There's no obligation or anything like that. We don't charge for that. So that's what you need to do, people. Okay, you need to start doing your own due diligence about opening your own family personal bank and understanding that the banks, Wells Fargo, these other guys, they are just using your money in order to get richer. Okay, and at such a point where the relationship becomes inconvenient for them, they will change it, as they did here in this case. All right, guys, so I hope you got a lot out of that. I will talk to you soon.